All right, stocks had a good day today, led higher by some pretty good news, some good and bad news. On the good front, you had GDP numbers beating expectations, were being revised higher. The first revision of the GDP was revised higher, up to 3.3%, kind of helping with that soft landing narrative that's out there with the Fed. Expected to cut rates here in the next couple of weeks. We'll get next few weeks. We'll get the Fed coming out with that rate cut decision. As a result, the dollar fell today. Yields fell today. That was a very good. We'll break all those charts down as well. The jobless claims number came in a little bit lower than what it had been previously, and so again, muting the weakness that we had previously seen from the non-farm payroll revisions. We're not really seeing a lot of that really significant weakness elsewhere in the labor market. Of course, the big news overnight was Nvidia. Nvidia had a really good earnings, of course, beating revenues. Did not report any sales of their H20 chip to China, but still, the stock started after earnings down, recovered by the open today, but then fell throughout the day. That did not stop the stock market, though, nor did it stop the technology sector, which is an outpacer. We'll take a look at the sector rotation as well to see kind of how things move today and what we should expect to see going into next week. There was one sector, of course, that struggled, and on the back end of things, consumer staples, one of your defensive sectors, led lower today by another earnings story, and we'll take a look at that. And then, of course, our trade idea was in that tech sector in a stock that's looking to break out on its own. So let's go ahead and get started. Today is Thursday, August 28th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's go ahead and get started and take a look at the S&P 500 with the market forecast indicator. As you can see, we do have a move higher and a close higher above 6,500 for the first time. So new highs, new closing highs, everything looking really good there. The intermediate lines maintaining its position above the in the upper reversal zone now, above the 90th percentile, up at the 94th. The near-term line also crossing above the 90th percentile as well, up to the 91st percentile. You can't really see it as well because it's right behind that green line, but very, very good short-term pattern, again, coming off of the low point from last Friday. We had that Friday bounce, and we've continued higher to a small degree this week, but that's expected. That's the kind of move that we'll continue to get simply because of how low volatility is and how small the ranges are right now. A little bit below average today at 40 points, but bigger than what we've seen, thanks for kind of a gradual move throughout the day and closing near the highs. That kept the momentum line higher. It's still in relative neutral territory here, the momentum line. So, it has an opportunity to continue to move higher, but it can also peak at these levels. You can see there's a lot of times that it can peak here as well. So something to keep an eye on. At least it's not extreme in one direction or the other. Usually when it's extreme in one direction or the other, it's hard to maintain the bullishness. So you either get a down day like this we saw here, or in this case, we had an up day. It was just a really small, only 20 points out of a range on that day. So it ends up being really small, and that's what brings, the momentum line came all the way down here, even though we were up 3 days after the spike. So that's kind of the idea. You either drop, here's another one here where you actually dropped a day slightly and then just went sideways for a couple of days. That's what brings the momentum line down, small ranges or down days. So it's not at that case right now. So it has opportunity to continue to move, especially with the near-term line, how strong it is. So that's why I think we should have a pretty decent close to the week tomorrow. Let's take a look at the NASDAQ 100. You can see it's turning higher, the intermediate line back in the bullish territory, 67th percentile. It's moving, the momentum line's moving higher. Looks like you might have another day or two to squeeze out of that move. Pretty strong move today, 0.5%. The near-term line well in the reversal zone. Market sentiment line also in the reversal zone and falling, as you can see. And you can see the PPO there at 1 1/3%. So that we're above the moving average by 1 1/3%. If you look at the SPX, we're almost 1 3/4% higher. So strongly bullish, right? We're not at that 2.5% mark, but as long as we're around it, and especially as long as we're above zero, that means we're still above the moving average. When we break zeros, when we get either a bull tag or something similar to a bull tag, and And again, that can be a really good buy signal, like it was on August the 1st, pretty much a bull tag there, or it can be the start of something worse. And so that's, depending upon what kind of short-term, what the near-term and momentum lines look like when we get to that point will help determine that. Let's take a look at the Dow Jones Industrial Average. So you can see the intermediate line's also very strong and high in the upper reversal zone. The near-term line's jumping up higher too, above the 80th percentile. The momentum line, again, stuck in neutral range, just like it is on the S&P 500. So opportunity to continue to go higher here. Can be, a sign of weakness if it were to peak, but very short term, and I doubt that will happen with how strong the near-term line is. We've got a nice little rally. We're over 2% above the moving average. And then finally, let's take a look at the Russell 2000. Again, very good move. Still not quite the all-time highs. I love how people like just sing the praises of the Russell 2000. Obviously, it's had a nice little catch-up trade here recently. Last little bit since August the 11th, when we've had that 2-day rally there. The Russell's been outperforming to a degree, but still, it's outperforming because it's been such an underperformer for so long. That is playing like catch-up trade right now, and that's generally just what it does, and usually catches up before, when you have a mature intermediate run. If it's playing catch-up during a mature intermediate run, because we don't know how long it's going to be, so we don't know if it's the end or not, but we do know it's mature because it's multiple months in. It's 1 to 3 months is your typical intermediate rally. We're past that 3-month time frame. It's more like 4 months here, so it's definitely mature. And when you do get a catch-up trade by the Russell, when you've already had a mature intermediate run, that can signal that we're closer to the end of that one, because that usually happens. It either happens at the beginning of a run temporarily when you're coming off the lows and everything is bouncing off lows, or it happens, like I said, at the end of a run when you get a little bit of a broadening trade and everybody's like all happy about the broadening trade, and usually that leads to at least an intermediate decline, which again would not be that big of a deal if we were to get a 5% pullback at any point in time. And it will happen. It's not going to happen next week, but at some point in time it will happen. And when it does, it will not be that big of a deal. Like, it moved down the pre-correction highs to 23% retracement. That's 5. And now we bounce off of that to a new double-digit green tag. It's actually be a great thing when it happens, right? Because it will, and it's just a matter of when. And it, again, it's it would be a problem if it fell 10% on that, but again, highly unlikely if that's going to be the case. All right, well, that does it for our market outlook video, our market outlook preview video. You can unlock the rest of the video by going to marketscholars.com. There's a link down to it in the description below, as well as in the pinned comment. All of our subscribers to Market Scholars get access to the Market Outlook video, a full version, including our foundation tier, which is our kind of our beginning tier at just $29 a month, essentially about $1.40, a little less than $1.40 per video. You get access to the full version of the video day after day. You get access to the trade idea that we do at the end of the video, including today's. You get access to our Market Outlook live stream that we do at 3:30 Eastern Time, where we take a look at all the current trades that we still have on from prior Market Outlook videos, and we manage them, talk about when to close them, which obviously is the most important thing. And then finally, the other really important thing is we track them. We track the results of those trades throughout the year, so we can kind of get an idea of how they do in terms of relative to whatever benchmark you want to use for your trading there. So you get all of that, again, like I said, for just $29 a month, or $299 a year. You get 2 months for free when you do the yearly sign up for our Market Outlook Foundation tier. Again, the link is in the description down below. Thank you for watching. Subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video. Follow me on Twitter, Facebook, LinkedIn, StockTwits, all the social media channels there. Like our stuff there. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.